Hi winners, look, welcome to Terry's Tips, guys. Get a notebook, get a pen, because today we're going to talk about 7 business credit cards that are for brand new businesses, new entrepreneurs, new investors, for startups. And guys, pause. Even if you've been in business a while, these are actually still good options. And guys, if you've been in business for a while but you never built business credit, these are going to also be good options for you. Got it, good, guys. So in this video, I'm going to explain what you need to qualify. Critical. I'm going to dispel some myths because there's a lot of bad information out there about getting approved for business credit cards. And then I'm actually going to outline the 7 actual cards. But don't get the cards and not listen to what you need to qualify, because then you're not going to get approved. Okay, and I'll do my nugget at the end, and I got something to say today, so I'm just going to leave it right there. And for all my newbies, welcome. Guys, my name is Terry. I'm a self-employed entrepreneur. I'm a mother. I'm a YouTuber. But more importantly, personal and business credit guru with over 20 years of experience. So guys, our channel is about wealth building, about leveraging your personal and business credit for a legacy, for passive income, to get to your goals. So if that's something you're looking to do, make sure you like, share, and subscribe. All right, guys, let me jump right in. So first, for business credit cards, okay, there is a myth that your personal credit does not matter. Wrong, wrong, and wrong. And let me just explain it to you guys. So number one of the things that you need to have in order to qualify for business credit cards as a startup is your personal credit needs to be okay. And I'm going to tell you why, guys. Because if you're a brand new startup, you have no revenue, you have no business credit, well, what else does that actual lender have to rate you on? Yes, y'all. So your personal credit, a range, you want to be at least like a 650 to 680. 650 to 680. As always, a 700 and above is better, okay? But a 650 to 680, especially for these actual cards, that is going to help you. And for one of them, actually your credit score is not really going to be a factor at all. But just know that the reason why is because you're a startup. You're a brand new business. They have nothing else to rate you on. So they are going to look at your personal credit. Now, nugget right here, guys. Some of them will do a soft inquiry. Some of them will do a hard inquiry. Guys, do your due diligence. I'm going to list the actual 7 companies, and I'm going to list the specific websites, especially because some of these credit card companies have multiple cards. So pay attention to the specific card I'm giving you in this video, because the specific card I'm giving you in this video are cards that are known to be approved for people that don't necessarily have perfect credit, and if you're a startup. That means, reading between the lines, they're not super hung up on revenue. That's one of the number one question you guys ask me. How do I get business credit and I have new revenue? Well, guys, this is one of the ways. Obviously, building up business credit through the tier system, tier 1, tier 2, tier 3. If you don't know what I'm talking about, go to my YouTube channel, click on the free business credit building playlist, guys, and watch those videos, make a list of action items and start to execute. But these business credit cards will give you revolving trade lines, benefit, which will do what? Help you build business credit. Another benefit is going to give you some leverage so you can spend some money and have some time before you pay it back. And it's going to help you qualify for the bigger money. Okay, guys, so there's multiple benefits. Now, let me add another nugget right here, guys. This goes into, what you need to qualify and the benefits. Guys, all of the cards I picked, the 7 cards, one of the reasons why I picked them is because they all have one or most of the following, okay? Cash back, rewards, low APR or 0 APR, balance transfers, different kinds of perks, right? And so there's different, sometimes even bonuses. Now, let me just say something about the bonuses. For the bonuses for new business credit cards, especially for new businesses, sometimes there's a high spend, right? So you may need to spend like, $7,000 in the very first 90 days to qualify for the business, but for the bonus. It's going to vary. So again, I'm giving you 7 business credit cards. Guys, look at one Monday, one Tuesday, one Wednesday, one Thursday. You're a business owner. Participate in your own rescue and do a little bit of research, especially because I'm giving you specific cards. So just know that all the cards on my list for brand new business credit cards in 2022 all have either no APR or, low APR or 0% for a while. Some have an annual fee, some don't. Some have rewards points, some have travel. They all have something, which is why they made the list. Got it, good guys. All right, guys, so some of the other things you need to actually qualify is that fundability and credibility piece. Did you hear me? Fundability and credibility piece. If you don't know what I'm talking about, again, go to my business credit building playlist. So this is where having a website, having a professional email, having a phone number, a separate business phone number, 1,000% having your EIN, especially because nugget, when you're applying for business credit cards as a startup, they're always going to ask for what? Some documentation. So when you apply for your EIN, which is free through the IRS, they give you an actual paper, right? Including all your business information and the EIN. That's part of your documentation to provide to the credit card companies. Got it, guys? So all of those things, being incorporated, your EIN, your business bank account, all of those things are going to help you not only qualify, guys, but also get higher limits. Now, another nugget here for qualifying, guys, is that for some of these companies, right, American Express, Chase, Capital One, I'll talk about specific cards, they also have what? Personal credit cards. So guys, leverage strategy. If you have a personal American Express and you have a business, I'm highlighting a business American Express, leverage that relationship. If you have a personal Capital One and I'm highlighting a business Capital One, leverage that relationship. Same thing with Chase, right? So what does that mean? That means call your current credit card company and say, hey, I have a Chase card, I have American Express, I have a Capital One, and I'm also a business owner looking to qualify for XYZ card that I'm going to give you. What is the process? Can this be a soft inquiry? Go that route, because guess what? The more data points you have with the lender, the more likely they are to qualify you and approve you for the actual card. Got it, good guys. Now, another thing, guys, this critical one here you guys asked me about is 2 specific things on the application you guys asked me about. Well, actually 3. Number 1 is revenue. Guys, for credit cards, they're not super hung up on revenue. So if your revenue is $0 or $1,000 or whatever, don't lie. Just put how much money you've made with your business. But they're also going to ask about your personal information. So this is where you can be a little bit strategic. Let's say you make $40,000 a year with your business or with your W-2 or something else. When you're filling out the application, put how much money your business makes, but then you're also going to put your actual information. Guys, you can go by your gross income, and let's say you can go by your household income, right? This is where always be honest, but I'm giving you guys some tips to kind of get approved, especially for bigger amounts. Let's say it's you and your boyfriend that live in a house, or your girlfriend or your spouse or whatever, and you both make $40,000 a year, right? Well, your household income, reading between the lines, is $80,000. Guys, when you're asking for your revenue, you can put $80,000 for you, right? The actual business owner, because they want to know that you have the capacity to pay it back. But for credit cards, they're not as hung up on that as like if you're getting like a business loan or a business line of credit. Got it, good guys. Another thing is industry. Now, not everything you do is going to be specific in the industry category. So guys, don't get hung up there either. Pick the option that most closely relates to your business. And let me just say this. Anything y'all do is a business. If you guys walk dogs, if you babysit, if you do eyelashes, if you cut grass, if you're a consultant, if you're a content creator, if you make ebooks, all of those things are businesses. So I recommend that you incorporate like not now, right now, and then go ahead and start building business credits. You can have multiple streams of income, passive income, leverage, a way to actually, have the lifestyle that you actually desire. So anything you do can be a business. Period. Okay, guys? So just pick the industry that most closely relates to what you do and that possibly looks lower risk. Mind you, so instead of flipping homes, property management, which you manage your properties, that's a little bit better. Instead of credit repair, business consulting, financial consulting, that's a little bit better. Read in between the lines. Always be honest, but pick some of the industries that are most closely related to what you do and possibly lower risk to the lenders. Okay, guys? And then this next one. Woo child. Y'all be in the comments. I did a video, I think it was called 5 EIN business credit cards. I get a comment probably almost every single day. In that video, I don't know if I did that maybe like a year ago, 6 months ago, I can't even remember, that says, you said EIN only, but it's asking for my social, blah, blah, blah. Let me help you today. And mind you, I'm joking around with y'all, especially for y'all that know me, y'all know I'm joking around. For my newbies, I promise you, I'm trying to free somebody, but there's so much bad information out there. So I'm trying to kind of enlighten you and educate you so you know going forward, right? Even though it's an EIN credit card or a business credit card, that means it's going to be in your business name, business EIN, and most of them report to the business credit bureaus only, right? However, on the application, they're always going to ask for what? The business owner's information. They need to verify who you are. Come on, somebody, anybody. Let me say, my business could be called, ABC Consulting. I fill out a business application with ABC Consulting's information to send it off. Well, they don't know who's the authorized signer, if I'm a principal, if I'm a partner, if I own 10% of the company or 90% of the company. The lenders need your information to confirm that you are in the business, it is a valid business, that you are somebody authorized to actually sign for this, you're someone that's authorized to actually apply for this. That doesn't mean that they're doing a hard pull necessarily, and it doesn't mean they're reporting it to personal credit. For these cards right here, they report to business, and some of them will only report to personal if you default, okay, guys? And actually, let me add something right here, because Capital One, 2 of their cards are actually on this list, and in the past, everybody knows. If you don't know now, you know, right? Capital One and Discover are known to have business credit cards that report to personal. However, there's new research saying that the Capital One cards will now not report to personal. They will only be on personal if you default. Again, do your due diligence. If you're unsure, call them and ask before you apply. Got it good, because they change information all the time. But I'm telling you, the reason why I put them on the list is because the research is saying that they're no longer reporting to personal for these Capital One cards. Got it good. So the biggest takeaway is, guys, no matter what you're applying for, even if it's a soft inquiry, even if they only check business, even if it's only going to report to business, they are still going to need to verify the identity of the person filling out the application and making sure you are authorized and part of the business to be able to apply and accept the actual business credit. Got it good, guys. All right, and so and one last thing I want to include. Guys, make sure you understand the difference between a charge card and a credit card. A charge card and a credit card. Most of these on this list are actual traditional credit cards. Some are charge cards. So a credit card is a revolving line of credit where you can charge a balance. There'll be a minimum amount due. And then obviously when you pay it back, that amount is available again. So you charge $5,000, maybe the minimum due is $500, and then you pay as much as you can, and when you pay, that money is available again. With a charge card, that's still a revolving line of credit. However, is usually due in like 30 days, right? So you charge $5,000, but the whole $5,000 is actually due in 30 days. Now, pause. Y'all be freaking out about this, but American Express has had a business model like this for forever. And to be honest with you, if you really want to look financially stable to lenders, the more you're able to actually manage positively multiple types of credit, meaning traditional cards, charge cards, installment credit, right? It actually shows that you're more financially stable and liable, more financially stable and therefore more fundable. So guys, if you have a charge card and let's say they give you $15,000, well, don't charge $15,000. What? Like seriously? So only use that one for like small purchases. That way you're using it. It's still a revolving line, and it's doing what? Helping you build business credit and helping you qualify for other items. So just make sure you know which credit cards, which cards are actual like traditional credit cards and which ones are charge cards. And guys, don't shy away from the ones that are charge cards. You be disciplined, you be responsible, and you manage those ones well. That way it helps you qualify for what? More revolving trade lines with higher amounts and better limits. Got it good, guys. All right, so now I'm going to jump into the actual cards. And of course, I had to write them down because I'm not going to remember because it's specific cards. So number 1 is the American Express Blue Business Cash Card. Now, real quick nugget here. Chase and American Express have cards on this list. Overall, I'm not saying whether it's true or not, okay, but overall, it's been like a trend, the kind of inside information. It's a little bit easier to get approved for the American Express than the Chase. I'm just telling y'all what I know, and obviously the stronger your personal credit scores, the more likely you are to get approved, period. All right, the second one is Capital One Sparks Cash Plus. Capital One Spark Cash Plus. The next one, number 3, is Divvy, D-I-V-V-Y. Now pause. This one for a fact is a soft inquiry. This one for a fact reports to all 3 business bureaus. And this one for a fact is also a charge card. But the reason why I include them on this list, and I love, love, love Divvy, is because they have a business credit builder card. So that means, y'all, if you apply for it and for whatever reason you don't qualify for the actual revolving line, they will give you a secured card. And that will do what? Help you build business credit, help you qualify for other things, help you have a business credit score, help you have a business credit profile. Put the link in the description, guys, so you crawl before you walk. You get that card, you pay it on time, then you qualify for other items. So Divvy, they do have cashback rewards and kind of bonuses as well. All right, the next one, number 4, guys, is the Chase Inc. Business Preferred. Guys, again, I'm going to go back into the description of the video and put the actual links for these specific cards. The next one, number 5, is Brex. Now, pause. This is another one that's like a fintech company like Divvy, and there's really a traditionally like a charge card. They've been upping some of their products and changing a lot of things. So Brex is growing. So is Divvy growing, kind of changing some of their qualifications. In the past, I haven't talked about Brex a whole lot because they had a revenue requirement of like 100,000, 150,000, 200,000. Now, some of you guys actually are like construction companies or consultants or influencers or whatever, and you actually are a new business and you have that revenue. Great. But a lot of new business owners, a lot of startups don't have $150,000 in revenue right away. So I didn't talk about them a whole lot because you guys wouldn't all qualify. But Brex is a business card that approves brand new businesses, and some of the requirements have changed. All right, number 6, guys, is Capital One Spark Classic for Business. And then number 7 is US Bank Business Platinum Card. I'm gonna say it again real quick, okay? American Express Blue Business Cash Card, Capital One Spark Cash Plus, Divvy, Chase Inc. Business Preferred, Brex, Capital One Spark Classic for Business, and US Bank Business Platinum Card. I'll go back in and put the links in the description. Guys, and for my nugget, some people are never satisfied. Let me tell you why I'm saying that, guys. I did a free 3-day business boot camp, credit leveraging boot camp, where I went over personal and business credit, 3 days of several hours of content for free to help people. And I had someone in the comments, I don't think you gave us enough. It was free. Like, some people are never satisfied. I was in the airport the other day, right? My Tuesday video, and I was giving information, right? The video was like 13 minutes. And I had somebody comment, no, when are you going to get to the information? I didn't eat. I didn't get a snack. I didn't get a chance to get water because that little bit of time I had before I boarded my plane, I decided to think of you all and just turn my phone on and pour into you. But they didn't see the fact that I was giving free content that they can literally get 6 and 7 figures. And guys, legit people from my videos have gotten 5, 6, and 7 figures from my free content. They always got something to say. So how that translate to you? You're never going to please everybody. Sometimes people will spend $0 and 0 cents and still have something to complain about. And I'm just going to talk heavy today because I feel like it. Let me tell you something. Most of my videos are what, 10, 15, 20 minutes. If you tell me you have goals, you have dreams, you have aspirations, you haven't had results for personal or business credit, you want legacy and wealth building, and you can't invest 10 to 20 minutes into watching a video that can make you 5 or 6 and 7 figures, you're not serious. And guess what else? Nobody has videos like mine in this industry that gives this much information. So you go ahead and watch the 3-minute video or the 8-minute video where 5 minutes is hype, and 3 minutes is half accurate content that you can't even execute on. I'm fine with that. But over here on this wealth building channel, people appreciate getting free content that literally when they execute has equal 5 and 6 and 7 figures. So to everybody out there, some people are never satisfied, and that's okay. You do the right thing for the right reasons and keep on building, keep on showing out, keep on helping people, and those people will never ever be satisfied. It has absolutely nothing to do with you. Amen? All right, guys, I hope that was helpful. Make sure you like, share, and subscribe, and I will see you soon.